Bitcoin to the moon today. This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin. Little b for the currency and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation. All Bitcoin, all the time. And I'm your host, Christine Lee, looking at our top story of the day. You can't escape it. Bitcoin skyrocketing to new record highs, touching $63,684 at around noontime in New York. The XBX Bitcoin price right now trading at $62,718. So just coming off, whoa, it's still up there. But coming up from those record highs, according to trade block data, the XBX has been the most reliable Bitcoin reference price for institutions since 2014, with billions in assets under management benchmarked against it. And the entire crypto market is rallying ahead of Coinbase's highly anticipated direct listing tomorrow. The Coinbase effect is driving Ether to new all-time highs, as well as XRP soaring about 30% when Coinbase goes public Wednesday. More than a handful of Wall Street firms stand to make a fortune. U.S. rapper Nas's investment firm Queensbridge Venture Partners joined Coinbase's Series B round back in 2013. He now stands to net $100 million when Coinbase's Coin stock goes live on the NASDAQ. And who could have predicted Bitcoin would hit $63,000 this week? Well, one firm actually did. Pantera Capital CEO Dan Morehead tweeting, "This is getting ridiculous. A year ago, we predicted Bitcoin hitting $62,968 this week. It just did. This Bitcoin rally is exactly like previous halvings, likely to reach $115,000 by August." So this chart is from Pantera's April 2020 investor letter. It predicts Bitcoin's price action leading up to and following previous halving events, which coincide with increases in price due to dwindling supply of Bitcoin. The halving is when Bitcoin block rewards, and essentially the number of newly minted Bitcoins, are programmed to cut in half. Bitcoin's last halving took place last May, and the next halving will likely happen in 2024. Based on previous halvings and subsequent price increases, Pantera predicts Bitcoin will surpass $115,000 by August. And so far, it's on track. Joining us now to discuss is quantum economics Bitcoin analyst Jason Deane. Welcome, Jason.
Hey, Christine, it's great to be back here. Always fun to come on and talk about my favorite subject, Bitcoin.
Great to have you, Jason. So $110,000 by August, will it happen?
Well, as you know, you've tried to pin me down with exact prices in the past, and it's something I won't do. But I will say it's actually possible. It could happen. There is underlying demand, which we've seen already really today with the price action that's been going on. So I wouldn't rule it out.
All right. We also have the Bitcoin one-day chart. Tell us what you're seeing here.
Yeah, I pulled this chart out because obviously this segment of the show is chart of the day. And of course, this morning with what was going on, it felt that we really couldn't have any other chart. We had to bring this one out. And you can see this one here is up to about an hour ago, I think. I think the key point to work out, because a lot of people have been in touch with me today and asked, what's going on? Why is this happening? And the word I've been using is inevitable. Not really meaning to quote sort of Elon Musk there, really. What I'm talking about is what's been going on over the last few weeks. Now, I'm sure you and the people who watch this have been following the Bitcoin's price movement. It's been quite sideways over the last few weeks, but you may have also have noticed that it kept creeping up, and it would hit the resistance, it will come down again, it will come up, it will hit the resistance and come down again, and it's been bouncing around like that now for some time. And the speed of which it was coming back up each time, it gave you a really good indication of just how strong the underlying demand is, right? So when it hit that resistance level, it would come down, but it will come straight back, like some 3-year-old child just said you're going to take to the park. They won't give up. They'll just keep coming back. And just some momentum was all that was needed to push through, and that momentum came today.
Yeah, people are greedy for Bitcoin according to some market sentiment analysis out there. We've got this chart. Tell us about this fear and greed index.
Well, I love this chart because it's such a simple indicator and it's got a great name. It does exactly what it says on the tin. And I picked these two out because actually this was from this morning. So this is my time, UK time. This is about sort of 8, 9 a.m. So this was just at the time that Bitcoin really started kicking off this morning. And I was just interested to see what that indicator said. Now, it's got a figure there of about 74. Now, that is in the greed category, but it isn't extreme greed. It isn't crazy. It didn't give us really any indication that this was going to happen. And I think it's quite a nice example that, technical analysis is quite interesting, but it never gives you the whole picture. Mm-hmm. And of course, the other one there, if I can refer to it.
Supporting this demand, we've got the amount of BTC held in all exchange wallets is plummeting. So tell us a bit about, what that means.
Well, again, this is another chart here that has been doing the rounds a bit recently. This one has been discussed by quite a few people. I mean, the general view here, and actually I subscribe to this, is that as we've seen price increase, we have seen that Bitcoin that's available on the exchanges decrease. Now, the way that we interpret this, or one way that we interpret this, is that this has been taken off the exchanges and put into long-term storage. And actually, we know anecdotally there are people doing this. Probably the most famous example, of course, is Michael Saylor, who's pretty much made it clear that all his Bitcoin is in very long-term storage. He'll probably never see the light of day again, and that's his Bitcoin, and he'll be accumulating it on that basis. And we know he's not the only one, and we know that other people are doing the same thing. So we will expect to see this effect increase because, I don't think we've really seen that effect bite yet. You imagine if you had, say, 10 people in a room, there's 5 chairs, right? And someone sits down in that chair, you've got 4 chairs left, 9 people. And as the number of chairs dwindles, right, you can imagine the value of that last chair is going to increase dramatically. That's kind
Jason,
of where we're going.
I know you have the Bitcoin laser eyes. And just so that our viewers know, there is a trend on social media to have a photo of yourself with laser eyes as a way to show you believe Bitcoin will hit $100,000. But Jason, just, for good measure, what is the bear case for Bitcoin?
I'll tell you what, Chris, I'm struggling to find a bear case right now. I mean, honestly, the only real way that this is going to be problematic from this point onwards, we've talked about regulation, actually, you and I already, haven't we, and how difficult this is to shut down. So the only point really you've got left is something going wrong in the code itself, right? So we're talking total, end of Bitcoin working as it does. That's the only way now, really, I can see this asset and this use case dying out.
We did see Bitcoin crash with the markets last year in March. If there is more restrictions on Bitcoin, that could potentially leave a dent. But nevertheless, it does look very bright in the weeks ahead. Underlying this is Coinbase's direct listing. I wonder if you could talk about the significance of this listing as it relates to Bitcoin.
Well, I mean, your opening statement sort of covered it beautifully, didn't it? I mean, this is a major event. There is a huge amount of money that is about to change hands here, and a lot of people are going to be sitting pretty after it. So, look, make no mistake, this is a significant event in the whole life cycle of Bitcoin. However, I think it's just a step in that process. Bitcoin itself will just carry on regardless, because we're only talking about one company's listing really in one country. Bitcoin is really much bigger than that.
Just quickly, 30 seconds. Will Coinbase, the stock, be correlated with Bitcoin, do you think?
Oh, that's a brilliant question. No one's ever asked me that. The short answer is I don't know. I absolutely don't. I'll be fascinated to see what goes on. As an analyst, I can guarantee I'll be following it.
All right. Thank you very much, Jason, for joining us this afternoon.
My pleasure.
All right. That was Jason Deane, Bitcoin analyst at Quantum Economics. Coming up, the Crypto Climate Accord and how it seeks to battle the narrative that Bitcoin is bad for the environment. Coinbase is one step closer to officially becoming a publicly traded company.
Coinbase will absolutely be seen as an alternative proxy to Bitcoin.
$100 billion is not crazy.
$100 billion looks a little bit rich.
I think the valuation is quite low.
Coinbase releasing meteoric quarterly results ahead of its highly anticipated listing.
They dropped some large numbers on the world.
Coin, which is their ticker, COIN, could almost be a better version of an ETF.
This event will enable more women in particular to invest in this industry.
And then there could be some reality that happens afterwards and some selling off.
The market will tell us a lot more Wednesday, April 14th.
Welcome back. Google is backing a project by EnergyWeb to help Bitcoin miners access local and regional energy markets in support of fully green grids. This is the latest announcement after EnergyWeb helped launch an initiative called the Crypto Climate Accord, which aims to have the entire crypto industry run on renewable energy by 2025. Joining us now to discuss is EnergyWeb Chief Commercial Officer Jesse Morris. Welcome, Jesse.
Hi, Christine. Thanks for having me.
Great to have you. All right, congratulations on this latest €1 million grant and launching the Crypto Climate Accord based on the Paris Climate Accord. Of course, not only do you aim to have the crypto industry run on green energy by 2025, you want to have net zero emissions and erase all past emissions by 2030. How do you hope to achieve this?
A little bit of context might help to set the stage. So our organization, EnergyWeb Foundation, we build open source software and we also use blockchain to help large companies decarbonize. Whether we're talking about crypto, whether we're talking about the grid in general, that's in our DNA. But what's interesting in EnergyWeb is we really sit at the nexus of sustainability and climate and the crypto industry. And that's really where the Crypto Climate Accord came from. Long story short, there are really good things going that are going to support the entire crypto industry becoming 100% renewable eventually. Renewables are becoming cheap. Just today, for the Bitcoin miners following, 1.5 cents per kilowatt hour. That's the cost of solar energy right now. It is the cheapest source of power in the world in most places. The challenge is, if you really look at Bitcoin in particular, we don't know what is the green hash rate of Bitcoin, for example. There's a lot of survey data that's great at giving an estimate, but we don't know exactly what's going on. So the whole point of the Crypto Climate Accord is to bring together this critical mass of the industry to tackle challenges like that. We know how to measure at the ASIC level how green a given unit of energy is. The challenge is the whole industry hasn't necessarily agreed or is moving towards a kind of standard for that kind of measurement. So those are the kind of activities that we're hoping to launch under the umbrella of the Crypto Climate Accord to help the entire industry move forward.
Well, you have some big movers and shakers in the crypto industry joining on. You have Ripple, CoinShares, Consensus announcing that they have signed on to this climate accord. But would every mining company, every crypto company need to join in order for this to be effective?
The Crypto Climate Accord is completely a voluntary private sector-led initiative. And the whole point is to say, here are some targets. They seem reasonable as a starting point. Let's finalize them. Let's make them more mature and let's move forward. But we don't want the accord to just be some sort of a political handshaking kind of event. It's meant to be an umbrella effort to drive action. And so that's why the point I mentioned earlier about this green hash rate measurement push, we want it to be a toolbox. If you are a Bitcoin miner that wants to make your system more green in a verified way, come on into the accord. If you are a Bitcoin holder who wants to make your existing crypto holdings green, come on into the accord and we'll help you do that. So no, not everybody needs to sign on for us to make tangible progress here. And if I had to look into the future, I'd say the thing to expect from the accord is to see leading organizations, again, whether they're Bitcoin holders, Bitcoin miners, other crypto companies coming in, we will work with them to show what the future is going to look like in terms of low carbon crypto.
Yeah, and Jesse, you're fighting a narrative out there that Bitcoin uses more electricity annually than the whole of Argentina, for example, according to a study by Cambridge University. Energetics, an energy consulting firm, also claims that the Bitcoin network consumes more energy than the country of New Zealand. So what are your thoughts when these studies come out?
The challenge with that narrative is that there are a lot of technology-centric industries that use an immense amount of electricity, and crypto is being singled out here, right? Artificial intelligence, IoT networks, cloud services, data centers, all of these technologies use a lot of electricity. And in fact, in crypto, we're dealing with something that is almost identical to what companies like Google and Microsoft are dealing with now, as it relates to data centers. They are similarly under pressure to make sure that their data centers are powered by 100% renewables. There is no regulatory standard for really showing every unit of energy that goes into a data center, how green is it? That's exactly what we're trying to figure out here in crypto too. Right. Can we show how green every unit of energy going into a Bitcoin or another cryptocurrency is? It's the exact same challenge that these other industries are facing.
Yeah, a lot of companies are concerned about sustainability. There is also narrative out there about obtaining clean Bitcoin. Do you think there will be a premium for Bitcoin mined sustainably?
The whole point, at least from the Accords perspective, and certainly from Energy Web's, is we're all about preserving the fungibility of Bitcoin, for example. So this whole point around green Bitcoins, regular Bitcoins, personally doesn't make a lot of sense. What we do see, though, is an opportunity for miners and other crypto market participants to use things like ETFs and other funds to differentiate themselves. And again, that's not coming from us. That's based on discussions with crypto mining organizations that are trying to differentiate. What you might see is large crypto holders taking unilateral action to decarbonize their holdings. So Tesla, any of these other big holders, they can go out there and purchase renewable energy to make their crypto clean. They can do that now. There's nothing stopping them. And in fact, we hope to help organizations like that take that activity under the Accord. But the longer term answer is indeed to help Bitcoin miners really just start verifying where is green energy being used in Bitcoin production.
Jesse, I'm glad you're thinking this through, and we'll be tracking your progress. Thanks for joining us this afternoon.
Thank you. Happy to be here.
All right, that was Energy Web Chief Commercial Officer Jesse Morris, and that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover and special coverage of Coinbase's public listing on the NASDAQ with one of the crypto exchange's first investors, Digital Currency Group CEO Barry Silbert. You're watching CoinDesk TV.